Thank you for joining us. Welcome to Business Incorporated, coming to you live from our studios here in Lagos. I'm Chimezie Obi Iwago. Coming up on the show, Africa Development Bank seeks funds to plug Africa's $170 billion infrastructure gap. IMF says Burkina Faso on track for GDP growth of around 6% this year. Plus, Sudan in talks with Saudi Arabia on 5-year oil aid agreement. Let's get the show started now with the markets. And here on the African continent, the Nigerian index was in the green at intraday thanks to the 3.71% gain recorded by Dangote Cement. The index was up 0.98%. Egypt was also up, outperforming by 1.65%. However, South Africa's JSE index came down by 0.23%, and Kenya closed in the red, 0.06% on Monday. In the Middle East, all the markets were in the red at intraday. Abu Dhabi, Saudi Arabia, and Qatar were treading waters heavily. Now, Dubai was down 0.47%. In Europe, markets were slightly higher in early trade as investors await critical news surrounding the Iran nuclear accord. For more on these and others, here is Daniel Coop, my colleague in Frankfurt. Hello, Daniel. Good afternoon. Good to see you. Hello, Daniel. Good to see you. Good afternoon.
Hi, can you hear me? I hear you very well.
I can hear you now.
See you again, Jimmy.
Right.
Fantastic.
Okay, Commerzbank, they're having their annual meeting today. That's Germany's second lender. What should we expect from this meeting?
Well, it is certainly the end of an era taking place at Commerzbank. During his last speech as the chairman of the supervisory board, Klaus-Peter Müller stated that he feels that the lender is on the right track. And in his opinion, Commerzbank was able to gain more equity capital again, and at the same time was able to decrease their pending lawsuits. He also pointed out that the lender was able to gain customers again in both the private and also the corporate banking sector, but that's, I guess, just one side of the story. Commerzbank is set to open their books on May 15th. Analysts fear that another loss of profits will be announced. Also, they want the share price to go up again. During the last 3 months, it lost almost 15%. I guess what's going to make shareholders at least a little bit happy, I would say, is that the lender announced finally a dividend again for the year of 2018. The last time this happened was actually in 2015 and only at a level of about 20 cents per share. So shareholders certainly will want more this time. The new man of the supervisory board most likely is going to be Stefan Schmidtmann. He has been with Commerzbank since 2008, and until 2015 he worked as the head of the risk management. Investors will be very excited about further comments in which direction he wants to navigate the lender. There have been lots of rumors in the past about potential buyers, BNP Paribas being interested, Unit Credit, even Deutsche Bank were always potential candidates, but so far this has not worked out. We have to remember that the German government was stepping in during the financial crisis when Commerzbank was really struggling, giving the bank big credits, even taking over some parts of the bank. And now that the bank is again on a better track, I would say, they really are looking for a partner that would be interested to marry them.
Oh, talking about that partnership and marriage, now let's look at one of the largest overseas acquisition by a Japanese company, Takeda, taking over share. What can you tell us about that deal?
Yes. Yes, this is certainly another mega deal in the pharmaceutical world. There have been, just like Commerzbank, many rumors about the possible merger between the two companies. Now we're learning that Takeda Pharmaceutical agreed to buy the London-listed Shire company for £45.3 billion. This is happening after the Japanese company raised the amount of cash in its offer to a level of over $30 to secure a recommendation. The deal, if it wins the backing of shareholders, will be, you just said it, the largest overseas acquisition by a Japanese company, and it's most likely going to propel Takeda into the top ranks of global drug makers. But investors are a little bit worried that the deal could be maybe a little bit too big, too risky, too expensive. The shares of Shire were traded this afternoon and morning below the agreed price, indicating that shareholders still have some reservation. The CEO of the company, Weber, who is, by the way, the first non-Japanese CEO, he was appointed in 2015. He is hoping that they're going to be a worldwide leader in providing targeted treatments. He also stated that buying Shire is certainly a very big financial step, but he believes that it will generate substantial cash flow. Let's see if all of this at the end is going to pay off. The deal is very attractive. Shire gives Takeda a larger presence in the United States and a better market access there, and even more important, expertise in rare diseases, an increasingly important area for pharmaceutical companies as patents on established drugs expire. Even though Shire's headquarters are in Dublin, it earns more than 2/3 of its revenue in the United States.